Well, happy December, y'all. We are about to talk about our December housing market update. And guys, I'm literally just hanging out here in my house, gonna give you this update because it is snowing outside. We woke up, it is snowing, it's gorgeous. I'm not going into the office today, so you don't get me behind my computer, maybe in my normal spot, but you get me here, and it's a little bit of a better Christmas mood here anyways. I am excited though, just to talk about the real estate market right now in December, but also just reflect a little bit on how we were at this time last year. And particularly, I want to talk about projections for 2026 of where's the real estate market going, what's going to be happening. So stick around for the entire video because I think you're going to find some really helpful nuggets about the real estate market to help you make decisions into next year. Okay, so without further ado, let's jump into the numbers. So the very first number we always look at is availability. This is inventory. We know that the real estate market is always supply and demand, so we want to know what's going on with inventory. Where is it moving? Well, you'll see right now we have 2,108 homes on the market, and that's 13% lower than we had at this time last month. Now, in one sense, 13% lower is a really big number, but not to be concerned in any way. This is simple, normal seasonality. This is just what happens in the holiday season. Less homes come on the market. Doesn't mean that less homes are selling. Multiple homes are still selling, though it's just less inventory. Though every single month this year, there has been increased inventory. Seriously, every single month. Last month was the very first month we had 0.3% less than we had month over month, and then we have 13% less this month. But every single month up until last month, we have been increasing inventory. And that's been very encouraging for the real estate market because last year that was not the case. And so as we look at right now, we have 31.4% more inventory year over year. So literally, if I was sitting here this time last year with snow in the background, I would be saying that we would be 31.4% less inventory. Different story last year. Right now, we're at much more of a healthy real estate market because we have 31.4% more inventory year over year, which is what we need to be able to see. Though, just for perspective, I want to let you know that we are still 20% less in inventory than we were in 2019. So pre-pandemic, pre-COVID, right, when the real estate market was a balanced real estate market, we still have 20% less inventory. With all the homes being built, with all the homes being sold, we still have 20% less inventory than we had on the market in 2019. And so this 2026 projection, I think, is going to help you and us know where are we going as a market. I think, praise the Lord, we have 31.4% more this year, but we are still 20% down. Here's the nugget. 2026 is projected to have 16% growth next year. So 16% more inventory hitting the market than we are now next year. Guys, that puts us very close to where we were in 2019. And so what does the availability tell us today? Well, the availability tells us that we are becoming much more of a balanced and neutralized market, which is a good market. It's good for sellers, it's good for buyers, it's a good market. And so going into next year, 16% more inventory, which gives you a little bit more to shop from if you're a buyer. And if you're a seller, it's going to give you a little bit more to, well, be competitive against as well. Now, under contracts were about 9.5% lower than we were month over month. Not a problem. That's normal because of seasonality. But I do want to talk about solds. So this last month, we had 680 solds, about 12.5% lower than we had the month over month. But I want to talk about big picture on sales. Grateful that we have 31% more inventory, okay? Though it doesn't necessarily mean we've had substantial more sales this year. So nationally, we're at about 0.3% more sales in 2025 that we had in 2024. So 0.3 more sales. That's not a big difference, all right? A very similar amount of homes have been selling year over year. Though here is the encouraging, and that is 2026, it is projected that there'll be 9.7% more sales. That's encouraging. Okay, so if we have 31% more inventory now, but we have another 16% more inventory next year, we should see sales go up, and that we should. About 9.7% we'll see in more sales. That means more sellers hitting the market, more buyers coming to the market this next year, but nothing to be overly concerned about. I think this is, again, just a balanced market that we're going to be coming into. Months of inventory, we're still tracking really close to 2.5 months. Just remember, technically anything under 3 months of inventory is a seller's market, though we're not really seeing signs of an actual seller's market right now, primarily because buyers are still getting some closing cost assistance and sellers are, well, having to be a little bit competitive on their price point. Now, if you just jump down real quick, list to close price here is 99.5%. So when I say sellers are having to be competitive with price, it doesn't mean that sellers are coming down on their sale price substantially when they're negotiating. They're just having to be a little bit more competitive when they're actually putting the home on the market, because 8.5% of all listings have been lowering their price point. And here's a scary stat, 22% of all listings actually canceled, meaning they just took it off the market. They tried to sell and they took it off the market. So a lot of houses are not selling if they don't show well and they're priced too high. They're just not going to sell. So 22% did not sell, and then 8.5% actually lowered their prices. So it's really important for you to be able to price it right. But when you do price it right, the list to close price is 99.5%. So sellers are getting really close to what they're actually asking for. Now, days on market. Now, we see here this first number is average days. So average days on market is 62 days, and then the median days is 39 days. Now, if you've been tracking me, you know that I think we should really track the median days a little bit more right now because that average is very skewed. Lots of houses that are overpriced, don't show well, just sitting on the market, not selling, and that's skewing these average numbers. But 39 is tracking with the national number. So the national average days on market is 34 days. And so we're seeing that very similarly around that 39 days here in Northern Virginia. Average showings, still around 2.5 showings per week. We talked about listed close price, but let's just finish out by talking about appreciation, average sales price. How much have homes actually gone up this year? Now, again, when I'm talking here, I am talking a little more generalized, not specifically every single house, but just the bigger picture here in Northern Virginia. Our average sales price really hasn't changed much. So we're at 572,000. This time last year, we were sitting around like 562,000. So it's not a dramatic price difference than we've seen actually increase in values over this year. Case and Schiller states that in 2025, we are projected to kind of end up by seeing either a 1.4 or 1.7% appreciation. So if you're wondering how much has my house increased in value over this last year, well, it's probably been around 1.4 to 1.7% it increased. Now, in one sense, you're like, oh, that's good. It didn't decrease. Exactly. It shouldn't have. Though, if you've been tracking with me, you know that I talk about how we should see an annual appreciation between 4 to 5% every single year. And the reality is, well, that's what we see on average, okay? So over the long term of real estate ownership, you will see on average a 4 to 5% appreciation every year. Though that doesn't mean every single year it actually appreciates that much. And we're seeing one of those. This past year, it did not appreciate 4 to 5%. It actually appreciated between 1.4 to 1.7%. And that's, again, just to be normalized. We're seeing a normalized market, a balanced market, not a declining market, not a depreciating market, but just a normalizing market. And so I want to share with you, what do we expect for 2026? All right, we have a wide variety of professionals of what they are anticipating that we see in 2026. Some are thinking that if the interest rates do really get into the 5% for everybody, then we will see more of a flood of buyers, which might increase prices. I don't actually think that's going to be the case. I think we're going to see more inventory, 31% to 16% more inventory. And so there's just more buyers are going to have more options to choose from. But let's just see here. National Association of Realtors is projecting a 4% appreciation. They're the most optimistic that I've read right now. So they anticipate a 4% appreciation coming into this next year. Realtor.com says 2.2%. Zillow is anticipating 1.2% appreciation in 2026. And then Redfin is thinking 1% appreciation in 2026. So some of the big hitters here that like to be able to put out their economical, assumptions. And so I think what you're seeing here, right, is we're not looking at a crazy real estate market in 2026, but we're also looking at a good real estate market, a balanced one, a neutralized market, where buyers can maybe get a little bit of closing cost assistance contributed towards the home from the seller. And sellers still looking at appreciating. So you're still being able to gain value in your home, but not so much that you should say, hey, drop everything and sell everything right this second. No, if you want to sell later next year, sell later next year. Though, if you're wondering if you should wait, why? I mean, the real estate market is going to be very similar from this time to next time. So just find the right time that is for you to buy and sell, okay? That's an encouraging factor. So many people over the last years have made decisions based upon fear and assumptions. I just don't think you need to make decisions based upon fear and assumptions coming into 2026. It's going to be a balanced market. It's going to be a neutral market, okay? One that is wonderful to sell in, one that is wonderful to buy in. I hope this was encouraging to you. Please send me questions. I'm happy to be able to dive in and talk more about your specific home coming into 2026. But if I don't talk to you before next year, have a Merry Christmas and a Happy New Year. God bless.